All right, we're getting the dip down to critical support and it's time for the bulls to show up at some very critical support levels. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right, today's SPY was down 0.61% and we are starting to get that dip back down to the breakout zone, which is this neckline at SPY 408. And remember, that is the higher high on the weekly chart. So there's always a good chance when you get a bull breakout that you need to come back down to that breakout level and test it as support. So for that reason, this is now a great risk reward setup as we're coming into support for the bulls to buy the dip off of the breakout level, which is right there at SPY 408. The bulls will need to buy at this support zone for any hopes of pushing higher to that next leg higher to close the gap at 421. And the longer SPY holds above this breakout at 408, the stronger the bulls will become. If you go back to last week on Thursday, I told you we were way too far overextended outside that upper Bollinger Band, so we were looking for a cool down because there's just no way being that far overextended the bulls can continue to push higher and continue to break to higher price targets. So a disciplined bull would have been locking in profits at that overextended condition and then saving some money to try to buy the dip off of the retest, and that's exactly what I expect to see the bulls doing. So do not be surprised if this is just another higher low off of the breakout level before we continue to push higher, because I do have higher price targets on SPY that take us into the 420s and 430s. Now on the contrary, if we do break that support, then we're very likely coming down to the support trend line, which is going to be this level right around SPY 402. Remember, if we lose one support level, that weakens the bulls. And if you go back and you look at the FOMC candle, which was on February 1st, we still have a lot of trapped bears that have still not been able to profit from shorting at that position. You could see on the SPY, we are just now starting to break below that closing high, and a lot of bears were shorting going into the meeting, meaning they are still bear trapped at much lower prices. So if the bulls want to squeeze those bears out of their position, they're going to try to show up at this support and start pushing towards 420 and squeeze those bears through that resistance at 414 all the way up to about 417. Now, if the bears are stronger, then they're going to break down through that support, and the bears want to try to push down towards SPY 400 to 402. And then if the bears are successful, then we'll be looking for a continuation of the bear market, which means we're more than likely going to break down through this support and continue lower. However, I always tell you the trend is your friend, and right now this is higher lows and higher highs, which is a bull trend. So expect to see buyers at SPY 408 and 402 with the upside resistance at 414, 417, and the gap close at 421. On the NASDAQ 100 triple Qs, we were down 0.85% today, and the triple Qs did fully close the gap at 303. And you can see, even though this was a pullback, this is just correcting the overextended condition from Thursday. And you can see it's still a very bullish pullback because we're still closing above a positively sloping 5 EMA. If the bears were strong after this overextended condition, they should have easily been able to push back down to the trend line. And while they may still be heading there, they're taking their sweet time getting there. So right now, with this gap filled on the triple Qs, that is more than likely going to be a support zone going into tomorrow. So you can try to buy the dip on the triple Qs and set your risk level right here, right around 303. If 303 fails, we're going down to the support trend line, which is right around 298. And then below 298, we still have the double bottom breakout of the neckline at 294, which does send us to much higher prices. So again, these are still bull trends of higher lows and higher highs with bull breakouts across the board. So I am expecting to see bulls showing up at support with the upside resistance in the triple Qs right around 311 to 313. And if we break that, we're very likely going to 322 and then 327. Now, one thing you're starting to notice on these ETFs is that we are getting bullish crossovers. And if you look at the SPY, we did get that golden cross, which is just simply the 50 moving average crossing back over the 200. So these are bullish patterns developing, which gives the bulls a lot of ability to buy the dip off of support levels. On the Dow Jones, we were down 0.15% as we continue to consolidate within this bull flag, with the bull breakout being above 341 and then 343. Above that, we can go to 346 to 350, and the downside support in this flag is currently sitting right around 333. If we break out of the flag to the downside, we will be looking for a retracement back down towards critical support at 327. On the Russell 2000 IWM ETF, we were down 1.45%, and we did close just slightly below the 5 EMA, and the critical support will be the trend line a little bit lower right around 192. If we lose support at 192, we're coming back down to the breakout at 188 with the upside resistance that's going to be right around 195 to 197. And if we break through 197, we should start pushing to 201 and then 203. On the ARKK ETF, we were down 1.42% and we fully closed the gap to the downside, which was right here, right around 41.7, and we did close back over the 5 EMA. So even though we're getting the cool down from this overextended condition, we are still holding above critical support at the breakout at 41.7. If we lose support, we still have the support trend line down here right around 40, and as long as we hold this support, we can continue to push higher with the upside resistance at 44.5 and 45.7. On the VIX, we were up 6%, and the VIX is starting to spike, but it's still being contained down below 20. And you can see with this trend line, we are putting in lower highs and lower lows. So the next thing we're looking is a possible rejection on the VIX at 20, and then coming back down and crushing below 18. On Bitcoin, we're currently trading just under 23,000, and Bitcoin did get that daily close below the 20 moving average, but we are still above the breakout level of support at 22,400. At some point, Bitcoin will need to consolidate this very strong push higher. But again, this is a very bullish impulse, so we're looking to buy the dip on a pullback in Bitcoin, which is going to be this opportunity right around 22,400, and below that we have the support at 21,300. You can see these moving averages are building bull trends, and we're trading above a very flat looking 200 simple moving average that at any point can start turning up and sloping upward, which is going to help Bitcoin push higher. On Amazon stock, we were down 1.17% today, and Amazon is getting into very favorable risk-reward ratios for the bulls, which is the support zone at 102 down to the support trend line right around 99 and the strong support at 98. This is great support to set your risk for bulls for the potential to push all the way back up to 115 and then 121. So set your risk at support, and if we break support, then it's possible we are coming down to fill the gap at 90. On Microsoft stock, we were down 0.61% today, and we did fully close the gap at 255, and we did hold above the support trendline breakout, which was the old bear market resistance. So as long as Microsoft can hold above 255, we are looking for a push in this stock to take us up to 265 to 267. If we lose support at 255, your critical support is 252, and below 252, we'll be looking for a revisit down here to around 242 to 243. On Nvidia stock, we were flat on the day, only going down 0.05% as we continue to find sellers around this resistance at 213, but we're still above the support trend line right around 205. If we break support at 205, look for a revisit down to support at 192. And if we break through 213 to 217, we're looking for the next upside price targets at 227 and the gap fill at 230. On Tesla stock, we were up 2.52% today, hitting our critical resistance yet again right here, right around 196. And I think this is going to be a very strong resistance level that will not easily be broken. However, if we do break that resistance, the next level higher will be just under 205. And if we do get rejected from 196, you're looking for critical support levels at 183, 173, and 167. And there is going to be a very good possibility we just build out a flag in this range before we go any higher, because at some point we need to consolidate these gains, squeeze out all of the shorts in this stock, and get a healthier position before we can push higher. And that should easily take us into the 230s, but it's going to take multiple weeks of consolidation. On Apple stock, we were down 1.79% today after getting a little overextended on Friday, and we did hit that critical resistance at 156. So as long as we hold the pullback of support at 150 or the gap fill at 146, you can continue to buy the dip in Apple stock. If we lose support at 146, look out below because we could be coming all the way back down to 141. Above 156, we start pushing into the 160s with a price target of about 170. On the financials, we were down 0.03%, and you can see the financials still have a nice bull trend, still above the support trend line and still above the resistance breakout of the higher high, so the financials are still in a very strong bull trend. The industrials were down 0.24%, still in the bull trend and still have the bullish price action. The healthcare sector was down 0.56% today with a downtrending channel that could be taking it back down towards 130 as long as we're trading below the resistance at 134. The energy sector was down 0.45%, clearly losing the support trend line and trading below all of our moving averages, so it is very likely that the energy sector is coming back down towards this support zone right around 82.6. So jumping back over to the S&P 500, this is definitely a very critical test of support for the bulls, but I give the bulls all of the advantage because they have the strong bull trend and they're coming into very good risk-reward ratios. So I will not be surprised in the slightest if the bulls buy up the dip and continue to push to higher prices. It is only once we lose critical support and see the market roll over and die that we're going to become bearish because we're staying objective and following the price action and the trend. And right now, the trend and the price action are still bullish, therefore we are going to remain bullish as well. Also, don't forget I have my own trade alert service called Bank Trade Alerts that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking clicking on the link in the description of this video. If you want access to all of my intraday updates and analysis and my members only videos, come join us over at the Stocks Channel Trading Discord community, and you can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.